Hey folks, this is Alex and welcome to my channel. In today's video, I'm going to talk to you about some really strange math that goes into investing. If you're someone who looks at the price of a stock going up and down, or you follow the S&P 500, you're going to want to know this very strange math. It's not only just strange math, but it's also strange psychology. And if you stay till the end of the video, I'm going to talk to you about a few weird little psychological tricks that some of the big investing firms that you may use are using to possibly play some games with your mind. So let's say I have a stock that's worth $100 and it goes down in value by 20%. So now it's worth $80. On the next day, it's priced at $80 and then it goes up by 20%. What's the value of the stock now? Well, I'll tell you this, it's not $100. It's actually $96. A 20% decrease one day and a 20% increase the next day did not get you back to the same number. In fact, you actually need a 25% increase from 80% to get you back to 100. It requires a bigger increase in gains just to make up a smaller decrease in losses. This is big and it scales really quickly. If that $100 took a 50% loss and is now worth $50, the stock's value has to go up by 200% in order to get back to that 100. It basically needs to double in value. In a previous video of mine, I talked about how Amazon stock went down by like over 90%. So if a stock goes down by 90%, it needs to go back up by 1,000% in order to reach that same value. So losses in the market are really bad. They're really bad. It takes a dramatic amount of increase in the value of a stock just to get back to where it was, and then to surpass it is even harder. However, there's an opportunity that can be had. If a $100 stock went down by 20% and you bought it at 80, then by the time it gets back to 100, you've actually made 25%. Likewise, if you bought it when it went down by 50%, you would basically double your money if it got back up to 100. And so I try to teach things from the intelligent investor. I'm very much a value investor myself. And so looking at prices that have gone down a lot also means the value, the potential gains that can be made could be huge. Understanding this strange math is very important when you're watching the news or hearing about any financial news from basically anybody. They may make these huge headlines about huge decreases and huge increases in stock value, but you really need to look at it from a relative perspective. Yeah, maybe stocks have gone up by 50%, but if the stock also went down by 50% the previous day, well, it's not making up nearly its value. News headlines are constantly trying to grab your attention and sometimes make things seem super over the top and blown out of proportions. But it's good to take a step back and view it from a distance and really objectively and rationally look at what they're telling you. Now, if you stuck around this long, I want to talk to you about another aspect of mentality and psychology when it comes to looking at these percentage increases and decreases. So if you're looking at your portfolio and you're looking at the daily or up and down ticks of your stocks or your investments on a platform like Fidelity or T. Rowe Price or Vanguard, they all basically use about the same color scheme, which is green means that something's going up and red means that it's going down. It's built into our psychology, and so if you were actually to see a red arrow going up for the value of a stock, it feels kind of weird. If you see a green arrow going down for the value of a stock, that also feels weird. We've become accustomed to seeing green arrows for up and red arrows for down, and when we see green and lots of green, we get happy. We get really excited. Remember, if a stock's value has gone down a lot, it requires a lot of green, a lot of increases in the stock's price to get back to where it originally was. And this can lead to some interesting investor psychology. You may become a little exuberant, excited, optimistic about what's happening. But I'll show you this line. I'm going to put this line of ups and down percentages across the screen, and it's got a lot of green in it. But at the end of the day, it's a loss. So this strange math is really to educate you. And as an investor, I think you really need to know and understand this math, and not just the math, but the psychology behind it, the mental thinking that goes along in your head as you're digesting these numbers. Losses in the market are huge, and it takes a lot more work to make back up those losses. The bigger the decrease, the bigger the gain you actually need in order to make up, just to make up those losses. I hope you guys enjoyed this video. Please like, comment, subscribe. It really helps me out. I'm trying to grow this channel. I'm trying to teach you guys some new things, and hopefully not just teach a concept, but expand your mind, expand the way you think about things. All right. I hope you enjoyed this, and I'll see you soon.